Inspiring interviews with today's top landlords. This is the Rental Income Podcast. And now, Dan Lane.
Farris, we've been following your investment journey over the last couple of years. You first started buying rentals about 5 years ago. I had you on the podcast 2 years ago. And at that time, you had 37 rentals. And after all your expenses, you were profiting $15,000 a month. Tell us where you are today.
Yeah, so today, after closing a recent acquisition of 20 units, my current portfolio has around 610 units. And out of that, I own personally 367. Some of the larger buildings I've split 50-50 with a good partner.
And today, after all the expenses, after you pay your mortgages and for management and any other repairs or any expenses you have, how much are you profiting today?
So it's around $90,000 a month net income conservatively. That's after factoring in vacancy, bad debt, and then obviously my in-house management staff.
That is absolutely incredible. It's totally unbelievable to think that 5 years ago, Farris knew nothing about real estate, and today he's profiting $90,000 a month on his rental properties. On the show today, we're going to figure out how he did it. We'll take a look at his portfolio. We'll figure out what he's buying and where he's getting the money from to make all this happen. Joining us on the show today from Northwest Indiana is Farris Gosea. We'll take a really quick break to thank our sponsors. We'll come right back and we'll talk to Farris. When you're buying a rental property, you can't do everything on your own. It's really important to have a team of people to help you. And in my opinion, the most important person to have on your team is a really good lender. The lender that I recommend is Chaley Ridge from Ridge Lending Group. Chaley is a nationwide lender, and she's also an experienced investor herself, and she understands the needs of both brand new and experienced investors, and she can help you find the best loan for you in your situation. Right now, Chaley has a special limited time offer just for our listeners. If you mention that you heard this ad on the Rental Income Podcast, Chaley will credit you back $250 at the closing for your property. If you want to get more details or you want to set up a time to talk to Chaley personally, or maybe have her look at a deal that you're looking at, you can reach out to Chaley at ridgelendinggroup.com. That's RIDGE lendinggroup.com. NMLS 42056.
Rental Income Podcast.
Farris, what I really respect about you is that you're just a regular guy. Tell us what you were doing before you started buying rental properties.
Yeah, so before I started buying rentals, I was actually a tennis coach. I grew up playing tennis all my life, played at University of Illinois. That's the reason I came to America. Ended up playing pro for about 1 year. After graduating, did not like it too much, so then got into tennis coaching and ended up buying my first single-family home back in 2018 while I was still coaching tennis.
Like, how did you get started? Like, maybe just walk us through real quickly how you bought your first property.
Yeah, great question. So I had saved up a bunch of money for 2 years from coaching tennis, and I had bought my first property late 2018. I was going to put a loan on it. It was $100,000, but I ended up seeing all the loan costs, which were about $3,000, and I was like, well, this doesn't make sense. So I bought it cash, which I ended up cash out refinancing that deal because obviously it's better to leverage things and buy more. But yeah, I started out with a single family home cash, and then about 2 weeks later, I closed on a duplex on the same street, not knowing that they were great deals. And at the time, they were kind of market value, but they ended up being very, very good deals in the long run for me. But that's how I started. Single family home duplex. A few months later, I bought a 4-unit, all while really trying to figure out the business, learn what I was doing, and just kind of taking it day by day.
And you've always stuck to after those first couple of deals, you've always stuck to saving up a 20% down payment and then using that to buy the next property?
Correct. Yeah, there was one deal I did, which was my first larger building, which was a 28 unit. I did raise $300,000. When I say raise, it was just a private note at 6% interest, and that was the down payment for that building. That was back in 2021. But at this stage, yeah, it's just all my own capital, 20% down. regular stuff.
So tell us about your portfolio. What does your portfolio look like today?
Yeah, so I have a couple larger complexes, 144 unit and 122 unit, which I split with a partner. And then I have some smaller buildings, 33, 28, 32, 19, 14, things like that. And then I have maybe 10 4 units, a few duplexes, and then I still have the single family homes that I started out buying back in 2018.
All right, so 367 of those properties you own yourself. And then how many do you own with partners?
So the two larger buildings, I split 50-50. And then some of the smaller ones, I have a friend with some small stake in it. So it ends up being around like high 300s of the units that I personally own, if you want to take in like personal ownership percentage.
And it's just amazing to me that in 2 years' time, you can go from 37 units to like over 600. I mean, have you been like working like crazy to do that? Like it just doesn't seem possible that someone could do that.
It's tough because what I do doesn't feel like work. So I guess, I feel like I'm doing what I love every day, all day.
Yeah. Yeah.
But no, to me, more of it is great. I don't want less of it. So the more deals I can look at, the more, I've really wanted to get under contract on a 150 unit. This year I have the funds to not split it right now. So I'd love to do that. That was a goal of mine, but with these rates, it's getting very, very tough. I did have a 300 unit actually under contract late last year, December, but that didn't work with the rate move. So no, I mean, I love what I do. I don't feel like I'm working that much. I just feel like I'm doing what I love.
Yeah, it's just so inspiring to me to see that this is possible. That 2 years ago, after all your expenses, you were making $15,000, and now you're making over $90,000 a month, and that's net. That's after you pay your mortgages, any management fees, repairs. Like you're personally profiting over $90,000 a month right now.
Correct. Yeah. And then with the principal pay down, I think that's an extra probably 40,000 a month. But I don't factor that in. So
like, how has your life changed? I mean, $15,000 a month is a lot of money, but like to be making that kind of money every month, how has it changed your life?
Really, it hasn't changed too much apart from, I can buy real estate a little quicker than before.
Right.
Yeah, so, I'm not, still living in a condo. I don't really use the space too much. Decent car, nothing special. It hasn't really changed my life. But again, I didn't get into it to try and go on vacation all the time. I got into it because I wanted to continue to buy more and more real estate long term.
Right. So you haven't had any lifestyle inflation? Like you're pretty much living the same life today that you did 2 years ago?
Oh, yeah, exact same lifestyle. To me, buying another building or a larger complex is way more rewarding than living in a bigger house or driving a nicer car.
Yeah.
Want all that money to go back into buying another complex. And to me, really, like we spoke about, I feel like I'm just getting started. Like I feel like 610 is the start of my career. And I'm hoping that the end of my career looks, closer to 50,000 or 100,000 units. That'd be great.
50,000 or 100,000 units. That's incredible. So do you have an income goal that you want to get to?
Realistically, an income goal, not so much. I think unit count is important for me. I know the number one, owner in the nation is at around 112,000 units, but again, that's syndicated stuff, so I don't know how much they personally own of that. But no, not really an income goal. I want to continue to grow the business. And I want to continue to see the obstacles that come with trying to operate more and more units, especially as I start to branch out across the country and just figure those out and try and get past barriers. That's really interesting to me in this business.
So a big part of your goals, a big part of your success seems to be that you're reinvesting a lot of that profit every month into buying more properties. Is that kind of where the big chunk of your funding has come from, is just reinvesting those rent checks every month?
Honestly, no. As a commercial broker, that's really helped. Last year, I made inside $1 million as a commercial broker. This year, I'm probably already at like coming up to 600,000. So that money is really helping me excel in terms of putting those checks back into the buildings, along with obviously bonus depreciating out all the buildings I buy. So I'm actually paying no federal taxes on any of this money.
Wow. Wow. Okay. I think that's an important thing too. I mean, when we first met you 2 years ago, you were doing real estate on the side. Like it seemed to be not a main thing for you, right? Like you were kind of part-time as a realtor 2 years ago.
Correct. Yeah, it was a little part-time stuff for me. I was still coaching tennis, trying to add to my unit count as I went. And I've told many people this. I think there's two parts to the real estate game, which is the first part is you need enough units to quit whatever you're doing that isn't inspiring or passionate to you, to then try and do something that is, while also having an income stream, right? So maybe if I jumped into commercial brokering with no income or no rentals, that's very risky. You have no money coming in, but once you have some rentals, you can maybe quit the W-2 and spend more time on something that is a passion of yours, to then really try and go big and blow it up. So I think that's the two phases to it is just get enough cash flow to sustain, like maybe quitting what you don't want to do as much right now to get into what you really do want to do, and then go big in that area. And I think that's where, lives can change.
Right. Okay. All right. So you've got a lot of commission, you've got a lot of rental income. Now, we've also seen a lot of appreciation over the last couple of years. Has that appreciation helped you? Like, have you been able to take equity out of your properties and reinvest that to help you grow?
Yeah, a lot of the properties I've cash out refinanced, to then obviously put that into a larger building or the next property. Lender relationships are huge. We bought a 19 unit, and a month later, I cash out refinanced it for $600,000. Not many lenders will do that. So really having those kind of relationships are key, making a lot of calls to lenders, having lunches, meeting them. But yes, I've definitely taken the equity and put it into more properties. And obviously through COVID, it was a horrible thing, but a lot of real estate did appreciate. So technically, the more assets you owned, the better you did. I mean, there's companies out there who had, a ton of assets who've made millions and millions of dollars just through the appreciation.
Yeah. Yeah. And so, I mean, what's I think really cool and also what's helping you grow is that you're doing this tax-free legally, that because the way the tax code is written, you're not paying taxes on your brokerage commission, you're not paying taxes on your rental income, and you're not paying taxes on the appreciation. So like that's millions of dollars a year that you're able to reinvest that if you had to pay taxes on, it would be a lot harder to grow.
Oh, absolutely.
Yeah.
Oh yeah. No, that would be very tough. I mean, the tax bracket I would hit would be pretty significant.
Yeah.
Obviously you can't there is no FICA on rental income, which is nice. The state taxes, I cannot avoid those, so I do have to pay state taxes. But yes, with the loophole, not loophole. I mean, it's right there in the code. I mean, if you bonus depreciate a building, and you have depreciation to use against active income, and you're a real estate professional, you can take that all day long. So for listeners out there, speak to your accountant if you have enough units and you're buying big enough buildings. Talk to your accountant and then get a cost segregation company to just do a report on a building. That's really going to help offset some taxes.
Now, is there any risk that you see in what you're doing, like that if all of a sudden tomorrow the market slows down and the brokerage commission goes away and maybe you have a lot of vacancy, like is there any risk where this could be taken away from you or that things could come crashing down?
So I think when people talk about leverage and risk, sometimes they don't really understand where the risk is, right? So yes, I do owe maybe 50 million plus to banks, but I don't owe that tomorrow. The only thing I owe next month is my payment, which with my property management, all expenses, utilities, and the mortgage, I think I spend around $300,000, a little over $300,000 a month, maybe. But with all the rental income coming in, I would have to be 75% occupied, and I would still break even. So 25% of my entire portfolio would have to be vacant for an entire year, and I would still break even. So out of
Right.
600 units, it's 150 vacancies. Right now we have one.
Right.
So, from that aspect, no. And then also from a leverage standpoint, again, it doesn't matter what I owe in total. It matters what I owe next month. And the risk comes with liquidity, right? If you're not liquid, or you're not a good operator, that's an issue. But if you have liquid funds and you know how much you want to keep aside, and you know how much you have coming in the next few months, then obviously you're always analyzing the risk. But there's no risk in terms of how much I feel like I have outstanding to banks, if that makes
Right.
sense.
Right. Now, is it hard to keep cash aside? I mean, when you seem like you aggressively want to grow, and you've got, even though you've got a lot of money, it's still a limited resource. And so the money's there. And so you need to keep money set aside for emergencies or for anything that might come up. But I imagine you also are looking for the next deal. So is it hard to keep money set aside when you know that you can find another deal and continue to grow your portfolio?
Yeah, good question. I think it's a balance that you have to find, especially when you're starting out, right? Like, do I want to put all of my money in here, but I need an emergency fund with my family? So it's a balance, and it's going to be very individual for people's risk tolerance and how much they feel like they need, and also how they feel like they can operate their property and the vacancy in their area. I mean, for me, I have a set number of something I just won't go below, that I will want to keep in my bank at all times, and then anything above that, I'm like, okay, that's liquid funds to put into the next deal. And then as I don't find deals, that pot will just grow, and I just have more to invest in the next deal, or maybe multiple deals. So, no, I think it's a continued thing, and the things you just have to continue to look at. But for right now, I think that is a very individual question that people have to figure out for themselves, what they would want in the bank, and also to figure out if they have more sizable portfolios, really what they think they're spending every month, how much is coming in, like their average vacancy over the last 2 years, to really like nail down a number that they think makes sense.
Yeah. Yeah. So tell me this, is it easier or harder to have a big portfolio versus where you were 2 years ago at 37 units? Like, do you feel like this is more stressful or harder to keep everything going?
No, at this point now, building out the company was stressful. Building out systems was stressful, that actually work month over month. But right now, no, I do way less on the management side and what I currently own than I do when I had 40 units and I was self-managing those.
So it's not hard. Like, you don't feel stressed out all the time.
No, I don't feel stressed at all, really. I mean, at this point, I know pretty much how much rent's going to come in by the 1st, how much is going to come in by the 5th, how many evictions we're probably going to file on a monthly basis. So, no, I track those metrics, and it seems pretty consistent.
Yeah. So it really it sounds like you've set up a business and you're treating this like a business. And whether you have 3 units or 600, I think treating it like a business is a smart thing to do. Would you agree with that?
Yeah, I would definitely say that more people who even own, like you said, 2 units to 20 units need to treat it more like a business than the tenants texting you at 9 p.m. that the toilet broke, or something like that, and getting into conversations or getting into arguments with them. I know it's tough, when you're the person, like you're the one taking the calls. But, software's out there like Buildium, I think really help put a barrier in place between you and the tenant. When they're putting maintenance tickets in, instead of you taking the call, it's just way better, I think, personally.
Yeah.
And I wish I had done that before than me being the one on the phone with them. Now, obviously, with this many units, they're all putting tickets in, and my maintenance directors, directing the maintenance guys every day. But, yeah, from that aspect, that's something I wish I had done, is run it more like a business when I was smaller than what I did.
Now, here's the last thing I want to ask you is that definitely when you're buying a property and you're rehabbing it, maybe you're going to do the BRRRR strategy. There's a lot of equity that you can create by buying a distressed property and fixing it up. And you're not doing that. Like you're buying stabilized properties that are in good shape, and you've obviously been very successful with it. And, we can't take anything away from that. But do you think you could make more money if you bought distressed properties, maybe something that's even vacant? Like, could you make more money if you went that way?
There might be an area in Ohio that I don't know about that's a great area, but that has some rundown buildings that would be perfect to turn around and make money. In Northwest Indiana, there's really not that many distressed or vacant buildings. Like, they're all humming along pretty nicely. So there wasn't that many opportunities for that in the first place, if that makes sense, in my area.
Yep.
So I never really had the opportunity, I guess, to do that. But also the other thing you have to factor in is obviously your time managing contractors, the risk involved. At this point, I have to look at it if I'm going to buy a bigger building that has vacancy or needs to be turned around, how that's going to get absorbed into my current operation and what I would lose. Maybe, my staff have less time to deal with that, or I have to overhire to deal with this new project. So there's a lot of other things that go into it other than just the spreadsheet looking at the ROI on just that deal as the holistic picture. But I don't think it's a bad option for people to do that. I just don't think that there's been that much opportunity here for me where it's been worth the time to get into it. And I think the more expensive rental markets, even though they might not make sense as rentals to keep, people seem to buy them. So if you can get into a cheaper BRR deal, the term there in Arizona or something, Phoenix, that might make sense where if you can go get the work done and sell it at a very compressed cap rate once you rent it out, there might be a good amount of equity you can
right.
Get.
So it sounds like what you're saying is you've got to look at the ROI on your time, but at the same time, you've got to look at your market, and those BRRRR properties in your market just haven't existed. So you got to work with what you're given.
Correct, exactly. And the BRRRR here, if you're buying something for 40 a door and the max it's worth is 80 a door, is it really worth it to get in there in the lesser areas, turn it around, rent it out, and make $20,000 per unit? I don't think so. But now, if you're in Arizona and the per door is $300K and you pick it up for $120, now there's a real spread on a bigger building, right? So it just depends on the market you're in and what you're looking to buy and your long-term goals, really,
That makes sense. Every area is different, and there's different opportunities in every market. So you just got to figure out how to make things work in your area. If anybody is investing or looking to invest in Northwest Indiana, I would definitely recommend reaching out to Farris. He is a full-time realtor, and he would be happy to connect with you and see if he can find you a deal. He also wanted me to mention that he knows of deals all throughout the country. So wherever you're looking to invest, it might be a good idea to reach out to him and see if he can help you out. If you want to reach out to him, I've got his contact information on the website. You can find it at rentalincomepodcast.com/episode 412. I'd like to thank today's sponsor for making today's episode possible. If Farris inspired you and you're ready to buy your first rental property, or you want to add to your portfolio, reach out to Chaley Ridge at Ridge Lending Group. She's a nationwide lender, and her specialty is helping investors finance rental properties. She has a ton of different loan programs, and she can find something that'll work for you in your situation. Right now, she has a special offer just for our listeners. If you mention the Rental Income Podcast, she will credit you back $250 at closing. If you want more details, reach out to Chaley personally. You can find her at ridgelendinggroup.com. That's RIDGE, lendinggroup.com, NMLS 42056. Thank you so much for checking out the podcast today. Make sure you hit that follow button. I put out a new interview every single Tuesday, and if you're following the show, you'll get notified as soon as the next episode comes out. My name is Dan Lane, and this has been the Rental Income Podcast.